And when I look at the industry average in terms of days days in accounts receivable, it's actually upwards of 50 days. And then it gets worse for the subcontractor base because there's always that lag, right? There's the pay when pay lag as well. So subcontractors are carrying that burden for a longer period of time. One of the things that I hear quite a bit from the accounting department of a lot of contractors is their frustration that their project managers, I tend to really emphasize ensuring that you view things like, overhead and profit as sort of an obligation, or, if a project manager can see that as an expense sort of obligation to their own company, and they treat it as such, then they're sort of more apt to ensure that they're including that in the invoice and not neglecting it. There's three things that I like to sort of emphasize, and that's the consistency, the timeliness, and communication. So first, be consistent in your invoicing. The other thing is timeliness. And this part is critical as well, because ultimately we're human, and we get into habits and we get into, cycles. The owners, when they receive an invoice, if it's timely and coming in at the same time every single month, then they actually will develop habits and behaviors to respond to that. But critical. And then, of course, communication, right? We can't talk enough about that topic, but follow up. Did you receive my invoice? Do you have any questions? Does it meet the standards? When are you coming to the job site? I want to make sure that I'm here for you. Communicate and be, again, consistent and timely on that communication as well. And then the other thing too is, I hear this a lot. Well, we're just using our cash. We don't use a line of credit. We don't use debt to finance project. We use our cash. And that gets me a little bit sick to my stomach, to be honest with you, because when a company's using their cash, that means they don't understand opportunity cost. And opportunity cost is much more expensive than a line of credit. Because if you look at your return on assets, right, your return on assets is probably closer to 10, 12, and some companies that are doing really well, right, their return on assets can be like 15%. Well, I would much rather use my line of credit at 5% than my cash that cost me, 12, 15%. That's significantly higher. Because now what I'm doing is I'm using the cash that should be used to grow my business, to expand into new markets, right? To develop into a stronger, right, more capable business. So this is just kind of a recap here. First, assess your current practice. What are your project managers currently doing in order to manage the cash flows? What tools are they using? So assess where you're at, and are you using a company cash or lines of credit? So figure that out, find out where you're at, and then calculate your cash flows. Get a tool, start getting it figured out. You can do it in Excel, but I guarantee you're going to spend a lot more time in Excel. Whatever tool you use, just get it in there and figure out what that negative cash flow is costing you, and then establish some kind of standard and create a managerial strategy, when to use cash, when to use your line of credit, right? And talk about that with, right, the necessary decision makers, and then make sure your project managers are using and reporting that tool that that you use, right? And that you're creating some consistency. What I have found is the companies that are consistently and timely sitting down with their project managers to hold them accountable, they begin to follow that same pattern. So it starts with you. It starts with the people that are going to be managing and leading your project management. And then finally, right, sort of the end of that cycle, use that report to measure your progress, provide your feedback to your team, and then start that iterative process over again and continue to refine it and use that to improve. So smaller contractors should incentivize quick payments. We have our material suppliers do it all the time, right? We get that invoice and it says up on the top right, it says, 2% discount, if paid within 10 days, the net is due 30, right? Why not incentivize early payments for your general contractors? If you're carrying your line of credit at 5% just to cash flow your own, small business needs, why not give the general contractor a point or two back on their on that invoice, a discount on their invoice if they pay you within 10-15 days instead of pay when paid?